In today's market update, we're going to be taking a look at three instruments: the S&P 500, working with SPX data, and also gold and Bitcoin. The theme of today's video is the concept of disappearing cycles, which is something that often seems to occur, but in fact does not happen according to Hurst's approach to financial markets. So let's start by taking a look at our SPX chart. This is the same analysis that we discuss in pretty much every single one of our market updates, and you will know that there is some discussion about the magnitude of the trough in October of last year. I have discussed this in the past two market updates in some detail, so I won't be repeating it. But just a quick heads up in case you haven't been keeping track of these videos, the probability for the October trough of last year is that it is of at least 20-week magnitude, but it might even be an early 18-month cycle trough. You will notice that for the purposes of today's video, I have simply hidden all cycle analysis information for cycles longer than the 80-day cycle. The reason that I do this is because I find it makes it easier to focus on information that we are confident in. I work with something that I call my level of confidence when it comes to a cycle analysis. And often when taking a look at a chart and you've got circles and whiskers for longer cycles and you're not sure whether they should really be there or they should be a diamond placed somewhere else on the chart, simply removing them can give us greater clarity in terms of what is happening. And so I have a good deal of confidence in terms of the fact that this trough was definitely of at least 80-day magnitude, but probably of longer magnitude. And of course, the trough that occurred in the first week of January this year is also a trough of 80-day magnitude. In simple terms, as we looked at in last week's video, we are expecting a 40-day cycle trough to occur over here, probably sometime next week. And then, of course, we have the next 80-day cycle trough over here in about the second week of March. Now, this trough in March, as I mentioned in last week's video, is probably an important cycle trough because the unresolved question about last October's trough does affect the expected magnitude of this trough in March. No matter which analysis turns out to be correct, we are still expecting a trough in March. And so in terms of what we are looking at happening now, we are looking at price coming down into a 40-day cycle trough here in February and then an 80-day cycle trough here in the middle of March. If we zoom in very quickly, I can point out to you what we are expecting next in terms of interaction between price and the FLD, which is a very useful tool, as you probably know if you've been watching these market update videos for any time. It is the most important tool, in my opinion, in the Hurst Cycles toolbox, and the interaction between price and the FLD follows a regular sequence of these interactions. This is our A category interaction, the very first one that happens, where price bounces out of the 80-day cycle trough and generates a target to the upside. That target was, of course, achieved last week. And then we expect the FLD to provide support to price in what we label a BC category interaction. The B category interaction is where price comes down to the FLD, finds support, and the C category interaction is where it bounces up and away from that FLD. That is usually referred to as a pair, as in the BC category interaction, because they often occur in the form of a single interaction where price finds support at the level of the FLD, which is indeed exactly what happened. That provided us with an early 20-day cycle trough. Under normal circumstances, we would expect price to cross down below the FLD on its way to achieve the 40-day cycle trough, which I've already mentioned is probably expected sometime next week. And so we should be looking out for that potential price cross below the 20-day FLD. But as I've been discussing in these recent market updates, the market is certainly still in a bullish mode. In other words, we are seeing bullish cycles playing out, and there have not yet been any bearish signs. And under those market conditions, it is possible that price will simply find support again at the level of that FLD. And so the FLD becomes very important to us, not only in monitoring the progress of the cycles, but also in terms of gauging the current mood of the market. Is the market still more bullish than would be expected, or are we beginning to turn towards a neutral market, or are we beginning to see bearish cracks appearing? And this is where the concept of disappearing cycles comes into the discussion. Let's zoom back out again, because I would like to point out what happened at the last 40-day cycle trough at the end of November last year. Here you can see price came down to the 20-day cycle FLD and failed to cross below it, but in fact found support at the level of that FLD, as I think you can see quite clearly on the chart. So what do I mean by disappearing cycles? What tends to happen with people when they first discover a cycle's approach to the market is they will choose a favorite cycle. Perhaps they've performed some form of spectral analysis and they've identified the presence of a cycle in that market, and they will then start trading it. If they're using a Hurst cycles approach, they will probably be able to identify that cycle as one of the cycles in the nominal model that we work with. The 40-day cycle, for instance, is a cycle that Hurst himself recommended as a good and reliable cycle in the markets. Certainly when I started trading with Hurst cycles, I was trading that 40-day cycle on daily charts. Usually, of course, when we are trading cycles, we expect the cycle to give us some upward movement, and then we expect the cycle to give us some downward movement. That is, of course, the definition of a cycle. It will cause prices to rise and then to fall. What does sometimes happen is what happened in the end of November last year, where the 40-day cycle influenced prices to rise. Of course, there were other cycles also causing that rise, which is an important fact to remember. The 80-day cycle was definitely causing price to rise, probably also the 20-week cycle, maybe the 40-week cycle, and perhaps even the 18-month cycle were all influencing price to rise at that time. And so trading the 40-day cycle, we were then looking for price to move down into the 40-day cycle trough, but that didn't happen. Newcomers to a cycle trading approach would at that point begin to suspect that the 40-day cycle had disappeared. I should point out that according to Hurst's approach, cycles do not disappear. They never disappear. These cycles keep beating. And as you can see in our analysis, there is no indication that the 40-day cycle simply disappeared. All that happened was that the 40-day cycle was overwhelmed by the power of the longer cycles. And that's a really important thing to remember. It's a very important thing to bear in mind. If you are trading the 40-day cycle and price is refusing to move down into a 40-day cycle trough, it is not because the 40-day cycle has all of a sudden disappeared. It is because that 40-day cycle is being overwhelmed by the power of longer cycles. Which, of course, brings us back to the question of the magnitude of this trough in October. The important thing to bear in mind as we are tracking the market is that these cycle troughs will form in the price action. If there is very little evidence of that particular cycle trough forming, we must nevertheless position a cycle trough somewhere there. If the cycle trough fails to be particularly prominent in the price action, it means that the longer cycles are exerting an influence. And so as we watch for the current 40-day cycle trough to form, we will be aware of the fact that the 40-day cycle trough must occur somewhere about over here, sometime next week, probably. But if the market fails to come down and cross below the 20-day FLD, that would not mean that the 40-day cycle has disappeared. It would simply mean that the pressure of the longer cycles is still predominantly bullish. As a matter of interest, are we expecting that? The answer to that question is no. Although the bullish pressure might continue, the current 80-day cycle, in other words, the 80-day cycle that started in January of this year, is expected to be less bullish than the previous 80-day cycle. And so the fact that the previous 40-day cycle trough at the end of November last year failed to find price crossing below the 20-day cycle FLD is not something that we expect to be repeated. If anything, this cycle should be less bullish, and so we are expecting price to cross down below the 20-day FLD on its way to forming the 40-day cycle trough. Gold provides us with an excellent example of this shifting of cycle shape as the mood of the market changes. Here is a 20-week cycle trough that formed in early October last year. The 80-day cycle trough, as you can see, formed in about the middle of December. We have a very neat and elegant M shape as formed by that 80-day cycle. Now notice the cycle shape that has been evolving as the next 80-day cycle plays out. Already we can see some fairly clear evidence that this cycle is not as bullish as the previous one. What are we expecting from gold? Well, we're expecting a less bullish 80-day cycle, and that cycle is expected to bring price into the next 20-week cycle trough expected over here in about the middle of February. But let's bring the discussion back to disappearing cycles. Let's focus again on the 40-day cycle. And if I display the 20-day cycle FLD again, you can see how the previous 40-day cycle trough that formed in about the middle of November last year did provide us with a good clean price cross down below the 20-day cycle FLD. And it was followed by a good clean cross back up above that FLD. If you were trading the 40-day cycle, you would have been very pleased with this strong move up and then a good strong move down into that 40-day cycle. We would continue to believe in the 40-day cycle as we saw another move up to this high price all the way up over here, and then of course a move down into the 80-day cycle trough. So we are seeing clean 40-day cycle shapes. However, you will notice that this analysis has positioned the recent 40-day cycle trough over here in the middle of January. But let's take a look at these interactions between price and the 20-day FLD. Let's zoom in to do that. Here is our 80-day cycle trough. Here is our first interaction between price and the 20-day FLD, our A category interaction, which generated a target over here, which was in fact reached by price. The 20-day cycle trough is where we expect price to find support at the level of the FLD. Well, you can see price didn't actually come down to the level of that FLD. Again, what happened? Did the 20-day cycle simply disappear? No, it was overwhelmed by the power of the longer cycles. The closest the price came to the 20-day FLD was over here, where it almost touched that FLD. And so the position of that 20-day cycle trough is in fact a little arbitrary. And our BC category interaction pair remains a little hazy. But the next interaction was the D category interaction as price comes down into the 40-day cycle trough. That was clearly over here, and price achieved the target of that price cross and then crossed back up above the FLD. This would then be labeled the E category interaction. In between the D category and the E category interaction is likely the 40-day cycle trough. However, this 40-day cycle trough has been positioned over here in the analysis. The reason for that is because the identification of that cycle trough is really rather tricky. It could be over here, or it might in fact be over there. Again, what is happening with this 40-day cycle? Has it disappeared? Has it stopped exerting any power? Well, it has been overwhelmed by the longer cycles. And in this case, what are those longer cycles doing? They are, of course, driving price down into the next 20-week cycle trough expected in the middle of February. And so, although a cycle does not disappear according to Hurst's approach to the markets, there are going to be times when it becomes difficult to identify the positions of these troughs. When that happens, usually the best approach is to take a step back and consider the bigger picture. which in this case, of course, is the fact that gold is heading down into a 20-week cycle trough. As a matter of interest, I'm speaking about the trough analysis in gold, and I often mention when speaking about gold that the peak analysis is usually considered to be more reliable. However, I would like to point out what has been happening in terms of the troughs in gold recently. The average length of the 80-day cycle discovered by Hurst 50 years ago is 68.2 days. Do you notice the length of that 80-day cycle that elapsed from early October until the middle of December? It is in fact exactly 68 days. The average length of the 40-day cycle discovered by Hurst is 34 days, and you can see that at 35 days, this position for the 40-day cycle trough, we are again very close to that average length. Having such accurate cycle lengths in the analysis is no guarantee that the analysis is a perfect one or that it is going to continue being so perfect. However, it is certainly an indication, in my opinion, that we should be paying attention to this trough analysis because it is working at the moment in gold. You might ask, why is that? Why do troughs work in gold at the moment, whereas we are often looking at the peaks? The truth is, I don't know what the answer is to that question, but when we see a good, reliable analysis, I do think it is important to focus on it. Finally, in our discussion about disappearing cycles, we're going to take a look at Bitcoin. Bitcoin, as I've mentioned before, is an interesting instrument because both the trough analysis and the peak analysis seem to apply. And recently I've been focusing on the trough analysis in Bitcoin. Bitcoin, of course, has been swayed tremendously by recent news, which has been affecting the crypto markets fairly strongly. An interesting thing happened in Bitcoin, which pertains directly to our discussion of disappearing cycles. Notice this 80-day cycle trough that is now positioned in the middle of November. Here is that price trough. But throughout this period of time, identifying these price troughs in the market was a very difficult thing to do. In fact, the previous update I did for Bitcoin positioned that 80-day cycle trough over here. Of course, when an analysis is wrong, it's usually wrong only by 1 degree in terms of the cycle magnitude. And so that 80-day cycle trough was probably, we can now see with the benefit of hindsight, only a 40-day cycle trough. And the next 80-day cycle trough we were expecting over here in the middle of December, of course, then was only a 40-day cycle trough. As price bounced out of this trough, and it was clearly not an 80-day cycle trough, but a lower magnitude trough, we could adjust our analysis. But why did this 80-day cycle that played out over this time here seem to disappear? Because again, we had price hardly coming down into this cycle trough at all. The answer to that is probably two things. One is the pressure of the longer cycles. Bitcoin was bouncing out of a 40-week cycle trough, but also, of course, fundamental interaction, which is the interaction between price movements and news events, which can cause increased volatility or suppressed volatility, and it can increase the influence of the cycles or decrease it. The important thing for Bitcoin is that it now seems to have emerged from a period of cycle analysis confusion, and we are seeing some fairly clear cycle action taking place. Zooming in on the recent price action, you can see that this trough that formed last week provides a very good candidate for this expected 20-week cycle trough. Price has now just crossed up above the 20-day cycle FLD. That is our A category interaction, and it generates a target just above $45,000. And so if this is indeed the 20-week cycle trough, which seems likely, we would expect price to reach up to achieve this target before coming down and finding support at the level of the 20-day cycle FLD. Of course, the degree to which it reaches the target or exceeds it or fails to reach it will provide us with an indication of the mood of Bitcoin at the moment. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server.